What's going on, guys? Happy Sunday here. So we're going to get ready to get into this week. Today is the 14th. Now, big news over the weekends. Sure, all of you guys, if you know, as long as you don't live under a rock, heard that there was an attempted assassination on President or former President Donald Trump at a campaign rally. Now, again, we're not going to get into much of the details. You guys can kind of go online and search the details yourself, form your own opinion. But big news, right? You know, we're living in a day and age right now where, you know, regardless of what side of the party you fall on, whether that be to the right or left, you know, you are subject to be attacked, and not only attacked in this type of manner, but attacked verbally, attacked emotionally, attacked, just judged, you know. But again, at the end of the day, we're here to make money. Events like this can move the markets. Now, I'm assuming that, you know, there's going to be a lot more headlines and stories that come out over the you know, the following days and weeks on the situation. So we're definitely going to keep that in consideration. Now, if we just look at the daily chart here on the Nasdaq 100, just going back a couple of days, we had that massive sell-off, down almost 600 points, 2.5% on the 11th, followed by a little bit of a dead cat bounce. Now, if you're kind of wondering, why did we dead cat bounce? Well, we came down into a couple of areas of support. Those areas of support were the 10-day moving average and the linear regression. Now, I am a supply and demand trader. I definitely respect technical analysis, and I use different moving averages to kind of give us a bias to help position ourselves in trades on smaller intraday timeframes. Now, what I will be looking at, because this is only just a dead cat bounce, we need to see Friday's highs get taken out, okay? 20,741 need to get taken out. If we do, we've got room up into this upper Bollinger Band and this top channel here. We could be looking at prices of 209.25. So all in all, again, there could be opportunity for a day two potential, especially off of what happened this weekend, for a continuation bounce. Now, right now the markets are open. It is Sunday at 6:45 in the, you know, evening here in California. We're pinched in between the 5 and the 10-day moving average here. Now, as this 5-day moving average starts to decline, it's going to create a little bit more pressure. We could see an initial little sell-off here, but if we get over this 5-day moving average going into the pre-market and into tomorrow's market open, we could expect a pop off the open. Okay, so if we do pop off the open, look for Friday's highs to get confirmed. That's going to really start to open things up. If we kind of sweep Friday's highs or come just short of it, putting in another lower a lower high, then I would look for the reversal, and that reversal is going to come down and through where we opened up today, and that price is going to be 20,508. Below 20,508 has room down here into 20,430, so I would look for price targets there. Anything below 430, we can definitely start to test this rising 20-day moving average sitting at 20,246. So make sure we keep those levels on watch. Make sure you kind of know what's going on from the top down. That way it can help you make a little bit better decisions on your smaller time frame scalps and day trades. Right now we're in a little bit of a range, okay? So this range can get a little choppy until the market wants to figure itself out. So until it figures itself out, what you can do is maybe wait 30 minutes after the market opens before you even start looking for trades. What that's going to help do is going to help create a little bit of structure. It's going to allow the volatility to kind of die down, and it's going to allow you to see charts a little bit more clear without taking so much of a risk. What you can also do is size down. So if you normally play one mini contract, maybe you can play 5. If you know, or you can play 5 micros. If you normally play 5 micros, maybe you can play 3 micros or 2 micros. You know, maybe you can cut your position size a quarter, or, you know, 50%, if you want to be a little bit more protective of your capital. Now, again, we have to kind of analyze what we did last week, make some adjustments. So if there's some things that maybe we necessarily could have done a little bit better from what we experienced in trading last week, then let's actually work on those things and focus on those things. Let's not approach the market tomorrow with, you know, hey, you know, I'll just keep running my head into the wall doing the same mistakes. Figure out what those mistakes are, whether they be mental mistakes, emotional mistakes, or technical mistakes, and see if you can fix them. Okay, now I don't want you guys to create a list of 10 things you're doing wrong in your trading and try to attack all 10 of them. Pick one. Okay, pick one mistake. If it's over trading after you're already positive, stop trading when, let's say, you maybe win 2 or 3 scalps. You know, if it's losing the first trade of the day and then doubling down on your size, maybe don't double down on your size, right? Work on one thing. If it's, you know, a personal daily loss limit, normally you're, you know, you've been accustomed to losing $500, $600. Let's cut that down to $250, $300. Let's change something that's going to help us for the better. Okay, let's not approach this week with the same kind of mentality. Now, if I look at the 1 hour chart, okay, because this is going to give us a little bit more of a clear view here. We're trapped between a lot of supply and demand zones here. We're in the middle, kind of bottom half of this range. Again, things could open up to the downside if we start to confirm 20,468 all the way down to 20,300s. And ultimately, what I would like to see us do if we're going to go back up to the upside is get back over 20,670s and then start to take out the 20,742. Over 20,742, I'd look for the price target of 20,859. That could be a nice juicy little trade there, but make sure you guys kind of take those profits into this linear regression, because our first attempt at the linear regression is probably going to get halted, followed by a little bit of a pullback consolidation. And then if it's a reversal, it's going to come back down and you guys are going to break even. So let's not break even. Let's take our money into the supply zone. If it holds and we get over the supply zone, then we would be looking to test those highs. So again, all in all, there's still a lot of stock charts in the technical side that look good for shorts. Okay, they look good for shorts. So what that could be telling us is that maybe Friday's dead cat bounce is nothing more than just a dead cat bounce, that we're looking for some type of rejection off the open. So if we're you know, right now we're only up 50 points, but you know, let's say come pre-market, market open, we're up 100, 150, 180 points. It might be telling you that there's a blow off top coming and they're going to try to trap early longs, maybe wait for that type of reversal so you can short the index. Now, if we open up flat or we open up a little down, then look for those shorts to get trapped and look for the reversal back up to the upside. That would be a nice trade. Hope this analysis helps you guys. Again, stay safe out there. Keep your opinions to yourself, guys. Again, at the end of the day, they're just opinions. Everyone's got one. Just do you is what I'm trying to say, right? At the end of the day, the only people that matter is yourself, your immediate family, and close friends. Everyone else in the social media space, you know, has nothing to do with your own personal life. I will look to see you guys in Evolution Traders tomorrow. I will look to see the rest of you guys on YouTube this week. And again, make sure we lock in those gains when we can.